Okay, let's unpack this now with Tim Water, who joins me from Sydney, Australia. Tim's a business and trade analyst. Pleasure to speak to you again, Tim. So we've seen it, consistent drops in oil prices. I was even reading just a few moments ago there might be somewhere in the region of 155 million barrels of Iranian oil just sitting around waiting to be bought up. Is the market telling us now the worst is over in terms of the oil price crisis?
Good to be with you, Neil. I think what it's telling us is that the speculative panic has now gone and there is now diplomatic breathing room. So the market's certainly much happier seeing Brent trading at sub $80 a barrel, but whether it stays there, that's another matter, because I think we're still in the very early stages of this normalisation process. And if we add into the fact that global oil stockpiles have been heavily depleted, they'll need to be filled back up again. That could provide a bit of a floor to prices as well. You mentioned the Singapore flag tanker involved in an incident just recently. So US and Iran perhaps not seeing completely eye to eye on what that normalisation process will look like around the Strait of Hormuz. So yes, oil looking much better now for financial markets compared to where it was even 1 month ago. But yeah, whether it stays here or not depends how quickly we get the shipping numbers around the Strait of Hormuz back to what it was pre-war. So we're talking about shipping movements around 100 plus per day. So still not there yet, long way to go. And there is scope for oil to move higher if the diplomatic process hits a bumpy patch again.
Yeah, we've seen that happen. We've seen plenty of those bumps. Let's talk about the Asian markets and a tech sell-off. Is this some people cashing in on profits? Is it more of a deeper concern about the tech bubble? Is it directly linked to Apple hiking their prices, which will have surprised a few people?
All of the above, really, is certainly the news from Apple. That was a bit of a scare to markets in terms of how that could affect the profitability of companies moving forward because of the demand destruction effect if prices are moving higher by the order of 20%. I think also just the fact that we have had the Nikkei and the Kospi hitting records recently. There's been profit-taking sitting in there, as well as investors taking some risk off the table ahead of the weekend, just in case there are any unexpected flare-ups between the US and Iran on the diplomatic front there. So a number of factors at play there, but certainly market and traders are getting a little bit more sceptical about the AI play at the moment, given the increasing unit costs that we're seeing as demonstrated by the Apple price hikes.
Should consumers be concerned? I mean, is this what's really happening? Chip makers, are they moving away from consumer products and moving towards the data centers because they see them as sort of higher margin, more opportunity for profit? Are we going to get much more expensive consumer goods?
That looks to be the case at the moment. If you were to project forward this scenario of higher consumer electronics, that could be in play for the next couple of years potentially, because the lead time to fix that supply shortfall in terms of building plants, that's a number of years at the very least. So yes, I mean essentially right now the AI boom is cannibalizing the rest of the tech sector, including consumer electronics. So high prices unfortunately could be something of a new theme for markets while the supply chain starts to play catch up. As I said, that's not the work of a moment. So yes, I think that could be not the best scenario for consumers moving forward. And that's, I guess, a byproduct of the AI boom that we have seen.
Cannibalizing the markets, that paints a fantastic picture. Great analysis. Thank you so much, Tim. Tim Water, business and trade analyst.